Yields back. The chair now recognizes the gentlewoman from California, Mrs. Waters, the ranking member of the Financial Services Committee, for 5 minutes.
Thank you very much. I'd like to address Ms. Thornton. Ms. Thornton, when most Americans think about our capital markets, they think of the New York Stock Exchange and stocks sold by large companies like Apple, Ford, or GE. However, many would be surprised to learn that the private markets now dwarf the public markets. And as I understand it historically, the private markets were where small businesses raise capital. But today, even the largest companies now raise much of their capital there. Can you provide a little more context as to how these changes have affected small businesses trying to raise capital and the impact on public markets? What do you think Congress should do or should encourage the SEC to do to support small businesses through capital markets?
Thank you, Ranking Member Waters. I appreciate the question. I think that historically, for like 5 decades after the securities laws were enacted, after the stock market crash of '29, we had a situation where the courts interpreted public as very broad, and so even sometimes situations where there was, one shareholder or a few, those companies were required to make public disclosures. Then with all of these proliferation of exemptions, the private markets grew, and as you said, today the private markets raise more annually than the public markets do. And the problem with that is that it's now there's no incentive for a company to go public. And that has serious ramifications for not just the people who invest in a company that's private, a company that doesn't disclose financials that are independently audited and so forth, but it also has ramifications when that company gets large and it sells products to American consumers. And if it runs into financial difficulties because it hasn't been overseen by regulators, that can actually have systemic problems in the capital markets. And that's what the SEC, that's another big part of the SEC's mission. So in addition to ensuring that investors and companies have adequate information when they invest in those companies, the SEC also needs to be aware of potential for systemic problems. And so we need to consider whether this situation we've gotten ourselves into needs to be rolled back a little bit. And I think it makes a lot of sense to look at these exemptions and consider how they can be trimmed back, whether we really need or want big companies in the private markets, and whether we shouldn't have a lot more disclosure for much of what goes on in the private markets.
Let me continue. Today, large private equity firms and multi-billion-dollar tech companies have taken advantage of exemptions originally meant for small businesses. For example, between 2009 and 2017, pooled investment funds, most of which are private equity funds, have raised $8.9 trillion of new capital through Regulation D offerings compared to $1.42 trillion raised by non-funds. What are your views on the uses and misuses of the exemptions originally meant for small businesses? Should multi-billion-dollar private firms and private equity firms be able to use them?
Absolutely not. I mean, it's basically an abuse of the system, if you will. I mean, when these really large, when these unicorns who have so much in assets and so much ability to raise capital are using something like Reg D to raise funds. And I think Commissioner Crenshaw just a week ago mentioned this as well, how much of Reg D is actually unicorns seeking additional capital. It just creates risks for, as I said, for the markets and also for the many people who invest.
Thank you. I'm going to go to Chair Wagner before I, continue with these questions. I would like to ask unanimous consent to submit a report for the hearing record that was released by North American Securities Administrators Association entitled Report and Recommendations for Reinvigorating Our Capital Markets.
Without objection.
So I have a few minutes left here, and I'll just have a statement I'd like to make. Constantly, all that we hear from small businesses is, I just don't have access to capital. If only there was a fair way to get access to capital, I know I could do well, I could expand, I could provide more goods, more services, I could do all of these things. And so as we confront this issue, we've got to find out what we can do. Quickly, under the pandemic with PPP, in that small period of time where we raised that money to get to small businesses, I want to tell you how helpful it was, how thankful they were, and how they were able to keep their employees on and on and on. With that, I yield back because I could talk about that all day. Thank you.